It's a banking space that's putting a lot of pressure at the index. So let's discuss the BFSI space more with Pranav Gundlapalle. He's a senior research analyst at Bernstein joining us on the show. Hi Pranav, good to have you on the show. Thanks so much for making time. Let's start by discussing HDFC Bank. The merged entity came out with its Q2 provisional update. What's the read-through?
Hey, so I think the HDFC headline numbers were positive, especially after the expectations were set low from the analyst meet, which the bank had about a couple of weeks ago. So I think the key positives are, one, the deposit growth. They had a good 18% plus year-on-year growth in deposits, which translates to almost about 1.1 trillion of additional deposits added during the quarter. I think that's the biggest positive, and that was where all the concerns were. If they can continue gathering deposits at a good pace, and that's partly led to rest from this update. Second, in terms of loan growth, also again, healthy numbers of about 18% when you consider the HDFC Bank book and HDFC Limited's retail book alone, right? So I think there is still some of the HDFC non-retail book which is being run down. So that will keep the headline loan growth number lower than what the bank has usually been reporting. But overall, if you take the core portfolios, loan growth and the deposit growth, I think on both these fronts, it was a fairly good set of numbers. And that, again, ties in with what you've seen across the sector, where the loan growth has come out to be quite good for all the banks that have reported their headline numbers so far.
Right. Pranav, I'm wondering, looking at Axis, I mean, what's gone wrong here? Is it just aligning itself with the weakness that we've seen pronounced in ICICI Bank and HDFC Bank?
It's more of that, right? I think you've seen that weakness for the banks, at least in the recent weeks. I think that is more to do with some of the global factors that are driving it down, rather than any bank-specific news at this stage. So HDFC just stood out because of the positive print that came out. But otherwise, you've seen that banks have generally lagged the overall index by a big margin in the last few weeks.
Word on the Axis Bank, because the bank has just, informed the exchanges that the news regarding 10,000 crore QIP is speculative in nature. So they are rebutting the article that was there in the morning in one of the papers, because they are saying that for now it's purely speculative and factually incorrect, and that's why perhaps we are likely to see a bit of a recovery when it comes to Axis Bank as well. But Pranav, apart from the large private banking names, PSU banks had seen quite a bit of favor from even institutional investors from the start of the year. Seems to be reversing a bit, at least today. What's your take when it comes to the PSU banking space? Do you think there is more room for improvement and then the upside on the stock prices?
So I think the overall, as a PSU unit as a whole, I think they have benefited from a re-rating as they continue to deliver healthy loan growth numbers down to the June quarter. I think what is now starting to show up is the pressure on margins. So it's now become a choice of growth versus margins. And I think SBI's NIM surprise last quarter was probably one of the best examples of that pressures that now have become very real for the PSU banks. So now it's going to become a harder challenge for the PSU banks to continue delivering that 20%, 30% EPS growth, as they will have to balance off between growth and margin. So that, in that sense, the earnings growth for those banks will start to look weaker versus the private sector banks, and then therefore the valuation multiple upside becomes limited. For SBI in particular, I think they have been pulled down because of capital issues, not the same kind that Axis has had, but more of a lack of organic capital accretion. I think that's something that's holding SBI back, and also the fact that they have not announced any big capital raise, even though their capital levels are quite low. So I think those are the factors specific to SBI. But for the broader PSU set, I think the days of supernormal earnings growth is largely done, and now they'll have to trade off between loan growth and margins.
That's a take coming in on the public banking space. But Pranav, what about the NBFCs at large? For instance, Bajaj Finance came out with a stellar set of numbers when it comes to their reporting. People are upping their guidance in terms of AUM growth for 33-35%. thereabouts, but the stock is still not reacting. Is it the entire market mood which is such, or where do you see Bajaj Finance and the other NBFCs headed?
So I think for NBFCs, two things here. I think on the positive front, I think the loan growth is holding up for the sector quite well. I think this is true for banks to a large extent, and more so for NBFCs, which are more consumer focused. I think versus start of the year, I think there is a lot more conviction that the consumer growth is good and is going to continue for longer. So that's the positive front. On the negative, I think the expectations of rate cut, which had a part in the NBFCs going up in the earlier part of the year, is now tapered off, right? So I think the expectations of rate cut are now pushed out to maybe mid next year or maybe even later. So that is something which is a negative for NBFCs, because a rate cut would have done their margins good. So that being pushed out is a negative, which is partly offset by loan growth continuing to come out quite healthily. So I think that's the balance that's coming off for NBFCs. And that's what you're seeing getting reflected in the stocks as well.
Pranav, what's the bias like? Do we buy the decline in private banks or the uptick in PSBs? Any recommendations from your end?
We prefer the private sector banks here. I think that so most of the factors that explain the run up in the PSUs and some of the other banks have largely played out. The valuation multiple re-rating, the earnings rebound because of normalization of credit costs, all those factors are largely done. So from here on, it will go back to the basics. And therefore, we prefer the private sector banks at this stage, just because of their sheer better deposit gathering ability. I think that's what really is going to stand out as a differentiator. And we prefer the private sector banks. And within that, the HDFC, we think, has a significant room for re-rating once the merger-related uncertainties are laid to rest, and therefore remains our topic in the space.
Okay, Pranav, thanks so much for joining us with that take on the entire banking space. So that's the verdict coming in. At least for now, Bernstein prefers the private banking names, especially the large caps at that.